30-year bonds are up for auction. Rick Santelli's tracking the action at the CME. You've been talking about this all week, Rick. What are we seeing?
Yes, it's once again, it's a very interesting auction. $22 billion 30-year bonds, actually 29-year, 10-month, adding to an issue originally primary auction a couple of months ago. The yield at this $22 billion Dutch auction, 4.734%. The when issued market was hovering right around 4.73. So the actual Dutch auction had a slightly higher yield, which means a slightly lower price. So there was about a half a basis point or so on a tail. That's the only thing that was wrong with this auction. Gave the grade a B+ in terms of demand, solid demand. And even though you see on the chart the yield's moving up a little bit, sometimes, just like yesterday's 10-year, even a good auction can't stop a sell-off. The market does have a life of its own once it gets beyond all the dynamics of an auction. And this particular auction had some very special features. The dealer takedown was 8.7%. I have enough history here to go back about 25 years. I can't find a smaller amount. That's the smallest amount for a 30-year auction on my records that the dealers took. That's a very aggressive bidding by actual investors, and that's a good thing at this point. And I would continue to say that during this shutdown, another interesting feature is pretty much all week, if you look at a year-to-date of 30-year bond yields, we are hovering pretty close to unchanged on the year. We settled right around 477 at the end of last year, and every day this week we've been closing basically in the low 470s. I think it's important. Should we start to close above that, I think that would be a technically significant feature that would put more upward pressure on long maturity interest rates.